Relationship exit decisions in AML risk management. Financial institutions are not obligated to maintain customer relationships when money laundering, terrorist financing, sanctions, or reputational risks exceed the institution's risk appetite or cannot be effectively mitigated. The CAMS framework emphasizes that customer exit decisions should be based on a structured risk assessment rather than isolated incidents or assumptions. Institutions must balance regulatory obligations, business considerations, legal requirements, and financial crime risks when evaluating customer relationships. Exiting a relationship is generally considered a last resort after reasonable efforts to understand customer activity and implement appropriate controls. However, institutions must be prepared to terminate relationships when risks become excessive or unmanageable. Indicators supporting relationship termination. Several factors may indicate that a customer relationship should be terminated due to excessive money laundering risk. Common indicators include repeated suspicious activity, refusal to provide required customer due diligence information, inability to verify beneficial ownership, ongoing sanctions concerns, repeated regulatory violations, involvement in criminal investigations, and persistent transactions lacking legitimate economic purpose. Additional concerns arise when customers provide misleading information, attempt to evade reporting requirements, or repeatedly circumvent institutional controls. The CAMS framework stresses that institutions should carefully document investigative findings, risk assessments, and decision-making processes before terminating a relationship. Proper documentation demonstrates that decisions were risk-based and supported by objective evidence. Risk-based exit decision model. A practical relationship exit model consists of risk identification, investigation, enhanced due diligence, escalation, decision-making, and implementation. Institutions should first identify suspicious activities or risk indicators and conduct thorough investigations. Enhanced due diligence may be performed to obtain additional information regarding customer activities, source of funds, beneficial ownership, and transaction purposes. Findings should be escalated to appropriate compliance, legal, and management personnel. If risks remain unacceptable despite mitigation efforts, management may approve account restrictions or relationship termination. Throughout the process, institutions must comply with legal requirements, maintain confidentiality, and ensure that actions are supported by documented evidence and governance oversight. Law enforcement requests to maintain customer accounts. In certain circumstances, law enforcement agencies may request that a financial institution keep a customer account open despite suspicious activity. Such requests often arise during ongoing criminal investigations involving money laundering, terrorist financing, fraud, corruption, organized crime, or other financial offenses. Maintaining the account may allow investigators to gather intelligence, identify co-conspirators, trace illicit funds, and develop evidence supporting enforcement actions. The CAMS framework recognizes that cooperation with law enforcement is an important component of financial crime prevention. However, institutions must carefully evaluate such requests while considering regulatory obligations, risk exposure, and internal governance requirements. Factors to consider when keeping an account open. When evaluating a law enforcement request to maintain a customer relationship, institutions should consider several factors. These include the legal authority supporting the request, the seriousness of the suspected criminal activity, potential risks to the institution, regulatory expectations, and the institution's ability to monitor the account effectively. Management, compliance, legal counsel, and relevant governance committees should participate in decision-making. Enhanced monitoring procedures may be required to identify additional suspicious activities while protecting the integrity of the investigation. Institutions should carefully document communications with authorities, internal deliberations, and risk mitigation measures to demonstrate that decisions were appropriately considered and controlled. Customer investigations and investigative objectives. Customer investigations are essential components of AML/CFT programs because they help institutions determine whether suspicious activity warrants escalation, reporting, account restrictions, or relationship termination. Investigations seek to understand the nature, purpose, source, and destination of funds while evaluating consistency with a customer's known profile and expected activities. The CAMS framework emphasizes a fact-based investigative approach supported by objective evidence and thorough documentation. Investigators should avoid assumptions and focus on gathering sufficient information to assess risk accurately. Effective investigations support regulatory compliance, enhance financial crime detection, and provide critical intelligence for law enforcement and financial intelligence units. Records and information reviewed during investigations. When conducting customer investigations, institutions should review a broad range of records and information sources. Common areas of review include customer identification documents, account opening records, beneficial ownership information, customer due diligence files, transaction histories, wire transfer records, cash activity, account statements, sanction screening results, suspicious activity alerts, and prior investigative reports. Investigators may also examine external information such as adverse media reports, public records, litigation records, corporate registrations, and regulatory databases. Reviewing multiple sources enables investigators to identify patterns, inconsistencies, connections among related parties, and potential indicators of money laundering, terrorist financing, sanctions evasion, or other financial crimes. Investigation model and documentation standards. A structured investigation model generally includes identification, information gathering, transaction analysis, customer profile assessment, risk evaluation, escalation, and documentation. Investigators should trace relevant transactions, assess account activity against expected behavior, identify related parties, and evaluate explanations provided by customers. Findings should be documented in a clear, objective, and comprehensive manner.